Hello, and thanks for joining us today for ACI Learning's audit webinar. Have a question? Use the GoToWebinar question box and we will answer as many as we can at the end. Now let's get started.
Hello and welcome to the ACI Learning webinar series. I'm so glad you've joined us. Today, our presenter, Linh Truong, will talk about developing a dynamic internal audit plan alongside Dr. Hernan Murdoch, ACI Learning audit instructor. Linh is an ACI instructor, professional speaker, and executive advisor focusing on agile auditing, corporate governance, ERM, corporate culture, and fraud and anti-corruption. She has 25 plus years of audit experience, including Chief Audit Executive at 3 companies where she launched the internal audit functions. She holds professional designations as a CIA, CPA, and CISA. Dr. Hernan Murdoch speaks at conferences in the U.S. and abroad and is the author of numerous articles and books on a variety of topics, including internal audit, fraud, and more. He holds professional designations as a CIA and is certified in RMA. He currently serves as the Vice President of Audit Content at ACI Learning. So what exactly is ACI Learning? It trains leaders in audit, cybersecurity, and IT, delivering lifetime learning to over 250,000 engaged students, professionals, and organizations across 6 continents. Many of you attending today may know of or have heard of the MIS Training Institute, or MISTI. MISTI has been training auditors, risk and compliance, fraud, and information security professionals worldwide for over 40 years. MISTI is now part of and is being rebranded as ACI Learning. Check us out at acilearning.com and follow us on your favorite social media. All right, we'd love to get questions from you as we go along, so please put them in the questions panel in GoToWebinar on the right side of your screen. We'll be sure to get to them after the presentation. This webinar is being recorded, and a link to the recording will be sent to you within a week. You can also download today's slides and any additional handouts by clicking on the links in the handouts panel. All right, now let's welcome in Linh and Hernan to today's webinar. Thank you so much for joining us. Where would you like to begin?
Thank you, Peter. Hello, everyone. Welcome, and welcome, Linh. It's so good to spend some time with you talking about a very, very important topic at this time of the year when we're looking at the ending of one year and the beginning of a new year. And of course, we are always focusing on risks and looking at how risk will help us and inform us in terms of the development of the annual audit plan. So a very important topic for sure, and something where your knowledge, your expertise will serve us very well in terms of leveraging your knowledge about this topic. So where should we begin as we start to explore the topics that should be on our annual audit plan?
Well, when I think of the audit plan, I'm thinking that most organizations are hopefully approaching their audit plan with a risk-based approach.
Mm-hmm.
And so with that assumption in mind, we need to look at the risks,
Yeah.
right? And we're looking at what the 2022 risks look like and beyond.
Mm-hmm.
And so some of these risks are going to be sticking around for a while, and probably evolving and changing. And so we do need to have a dynamic audit plan to be adaptable to the risks of tomorrow, next year, and into the next 5 to 10 years, to be honest with you. But let's take a look, first of all, of the risks that I'm seeing
Mm-hmm.
emerging, popping up repeatedly as I look at multiple types of white papers and think tanks that are talking about what risks will be hanging over us
Mm-hmm.
in 2022 and in the future as well. So I'd like to speak about these risks in groups.
Okay, perfect.
Because a part of being or of having a dynamic audit plan is to be robust enough to have audits that hopefully impact and address multiple risks and not just be siloed and address one risk at a time.
And in many cases, the risks they don't behave that way, actually. One of them leads to another, one triggers
Exactly.
another. So we have to understand how they relate to each other and how they may interact.
That's right. Risks don't live in a silo. They
Right.
are interactive.
Yes.
And so let's talk about the first group, I will say,
Okay, very good.
of risks. When you look at the risks in a group like cybersecurity and data privacy. So from this list, I would group these two together because you can do several types of audits on the audit plan that will be the one stone that kills multiple birds, if you will. So when I think of data privacy and cybersecurity risks, I think of audits like doing a NIST cybersecurity assessment.
Using the framework to leverage that in terms of the review of the controls and all of those things.
Right, and within that robust NIST cybersecurity framework, there are pieces of it in the framework that will tackle data privacy as well, right?
Right.
And what you can do is if these two risks are top of mind for your organization, then when you're doing a NIST cybersecurity assessment, for example, you could do kind of spend a little bit more time in the areas of that framework assessment, cybersecurity assessment that kind of digs a little bit deeper in the personal data area, right? And so you kind of tackle data privacy a little bit more
Right.
than the rest of the framework.
Excellent.
So that is what I would do, but you can do other types of audits as well. You could do a data privacy audit. You could do a data governance audit as well.
And that's very important as well, because in many organizations, we talk about cybersecurity, we talk about all the different things that are affecting organizations, and the landscape keeps changing.
Right.
So many things are happening just about every day. So being able to take a look at that, do a deep dive, and then being able to also establish what kind of controls we have in place and what kind of monitoring mechanism as well to keep us up to date as times evolve, so that if anything changes, any incidents emerge, we can be responsive as well. So we can work with management in the development of our reaction plan, right? Our response plan.
And I think governance is a really important area to look at when you are auditing these technical areas. A lot of time, auditors will throw a lot of technical expertise in these technical areas, which is kind of a natural reaction. But even the best controls in the world that do the blocking and tackling for cybersecurity and or data privacy may not work as effectively if the governance, the foundational controls aren't there. If, let's say, the CIO doesn't have a seat at the table, if the IT security group is just being viewed by the organization as order takers instead of business partners,
Right.
and if they're not being invited to the table to understand what the company's strategy is in the next 3 to 5 years, they can't properly plan for what types of technology risks, right, cybersecurity risks that could come out of those plans if they're just having to wait in the wings until senior management tells them what to do.
Right.
Right.
Okay.
So I think looking at governance, things like training, and whether the CISO has his or her 15 minutes of fame with the audit committee or the board, right? Are they on the board agenda? So things like that to look at as well, not to forget about those foundational controls.
Excellent. Very good and very helpful advice there as well, for sure. Okay, so we look at the first grouping, cybersecurity and data privacy. Let's take a look at the second grouping.
Right. So from this list, I would have the next group be talent management, organizational governance, and culture. Those three risks can be tackled by kind of common audits.
A lot of people-related topics related to this grouping.
Exactly. And culture, obviously, is something that's an emerging risk. You're starting to hear the term culture in the boardrooms, at least I have.
Yes, I have
I'm
as
sure,
well.
yeah.
Yes.
So I think talent management is an area where it could spell, obviously, it could spell an HR audit. But what I want auditors to do when they're planning for a talent management audit is not to focus on things like correct payroll calculation, or things like that. Really, when you're doing an HR audit and you're trying to help the organization address talent management risk, you should be looking at processes like the recruiting process or the onboarding process, the training process, upskilling.
And the retention, too, is it's an ongoing challenge right now for a lot of organizations in terms of retaining staff.
Right.
So if you have a high turnover rate, and a lot of companies are really hurting by it, this will help tremendously to identify what may be causing it and how they can better be responsive to the employees of the organization as well.
Absolutely. Understanding whether the HR function has updated their benefits, their perks, right? Their compensation packages in order to compete in this candidate-driven market. With this great resignation that's going on that we're experiencing. So making sure that the organization is ready for keeping their talent and attracting the right people.
Another big disruptor that's happening right now has to do with work from home dynamics, which is affecting people and culture and all of these elements as well. Talent management, again, where is the talent many times working from home, which could be anywhere in the world. So how is that being identified and managed?
Right. So if the next generation of the workforce is prioritizing things like work-life balance and flexibility, I can work from anywhere, then the organizational governance of the company needs to keep up with that, right? So their policies on, working remotely, implementing that, or maybe it's a hybrid approach in order to attract that next generation of workers. Otherwise, your competitors are going to change their policies and work environment in order to attract the talent away from you. So things like that, as well as providing more in terms of mental health support, right? Mental health is a growing concern, especially after a pandemic. And so looking at the benefits and making sure that that's keeping up with the needs of the workforce as
And that
well.
relates to another term that I've heard quite often recently as well as wellness. And of
Yes.
course, it goes to mental health and so on, but wellness in general definitely being a topic of conversation these days and something that's worrying a lot of individuals because of how it impacts the workforce. And once again, we're talking about talent management, is people and how they're able to do their work to benefit the organization and their clients and all of those relationships out there.
That's right. So now let's talk about culture, because that's a term that we should spend some time on. I know that there's a lot of audit functions that have never had to deal with auditing or assessing culture, right? How do you do that? It's so
different.
ubiquitous, yeah.
Yes.
And so what you need to do, just like dealing with reputation risks, you're not going to try to audit the company's reputation, as the animal that you're auditing, but you're going to be looking at the drivers of reputation risk. And in this case, you're looking at the drivers of culture and auditing that layer. So what are the drivers of culture? It's tone at the top. It's, how you compensate people. It's your mission and values. What are your company's values, and how do you drive those values through policies and procedures, and how you incentivize them, right?
Exactly.
So if your values are that our employees will do the right thing, that's a very common generic value, then how are you compensating your employees to do the right things, right? If your compensation structure is always compensating people to bring in more volume and transactions, regardless of how they bring it in, then
That's a recipe for trouble.
exactly. Then how is that going to align with your value that's stated to the world externally on your website that our people will do the right thing? So I would look to see whether the compensation structure not only incentivizes employees to obviously increase revenues and volume and growth, but also how do we do it? So do you do it ethically? Do you stay within the bright red lines of our code of conduct policy? Is there a line item on your performance evaluation that also assesses your whether you did your job within in compliance with the company's values and in compliance
Exactly.
with the company's code of conduct? So that's what as an auditor, that's what I'd like to see.
Exactly right. So documentation behind it, the pronouncements that are made, the follow through, the examples set by management,
Right.
training and orientation and so on, onboarding activities, all of those things fit into this and how we instruct our employees of what we expect from them productivity wise and also behaviorally.
Right. And we can talk about culture for a very long time.
Yes.
But I just want to touch on one more thing. But a lot of companies are doing engagement surveys now, right?
Yes.
To make sure that their employees are engaged, and it helps to make sure that how the employees feel is consistent and aligned with the values of the company and the culture that the leaders want to promote in the organization. And so that's great to have an engagement survey. But what's important is that companies do something about the information, right? Because if you keep doing the engagement surveys year after year, but there's no action items from the low scores, right? If there's a big gap between the desired culture versus what the actual results indicate, and you recognize that that's a gap, what are you going to do about it? What is leadership prepared to do to invest in, right? Energy and maybe even budget resources to try to close those culture gaps.
It could be demotivating to the employees.
Right. They'll
If-
stop participating.
Exactly, exactly. Very good. Thank you very much. That's very helpful information as relates to this one. Let's take a look at the next grouping, okay?
Sure.
So we're looking at the next grouping of risks from our list.
So the next group here, and I know that cybersecurity is being, double dipping, but, like we said, the risks can overlap,
Exactly.
right? They interact. And so in this group, what I see here is disruption, right? That's the common theme. And so there's economic and political volatility that could disrupt your industry, depending upon what your industry is, right? Every time there's a changeover of political administration, there could be new policies, tax laws, economic policies
Exactly.
that, again, depending upon your industry and business, could disrupt you either positively or negatively.
Right.
And even the positive disruption, if there's some sort of economic world event that causes you to benefit wildly, and your demand increases by 200%, are you ready? Are you ready to all of a sudden, increase production by 200%? So
Okay.
there's both opportunity and there's value creation and value protection when it comes to volatility and disruption. And then, of course, we're all experiencing supply chain disruption as a result of the pandemic
Right.
as well. And so how are companies prepared for that? And so here, obviously, auditors should be putting on their audit plans supply chain types of audits, procurement audits. Are we just dealing with one key critical provider and relying
or
upon
several.
exactly, or having the number 2, number 3 providers waiting in the wings just in case?
And there's another dynamic too, where it's a subcontracting dynamic as well.
Yes.
So you may have a relationship or contract with one supplier, and then they have a relationship with others, but then cascades. If they have a disruption, that can also affect you tremendously too.
Right.
So we have to be very mindful about that fourth level, right? Third party, fourth party, fifth party risk.
Right.
And how the organization is managing that dynamic, because it can be very disruptive as well.
And how flexible are your suppliers, right? Do you have contracts that are inflexible to a sudden drop in your need for them? But also, if you need to ramp up production, do they have the capacity to accommodate you? Either
Exactly.
ways, right? So choosing the right suppliers and vendors, but also the right contracts to be adaptable. And then there's disruptive innovation. So here we have hopefully you're not the next blockbuster, right?
Right.
So like you said the other day, it's not just about, internal auditors should not just be helping companies do the things right, but also making sure they're doing the right things right. So is your organization, what is your company not doing that they should be?
Exactly. The opportunity cost in many cases is missed because we're so focused on what can go wrong, and we're sometimes overly conservative.
Right.
When in some cases you could have a huge opportunity cost, and because you're so conservative, the organization is not going to increase its value like it could or should.
Taking risks
Exactly.
on research and development, being
Expansion.
innovative.
Exactly, innovation, yes.
And do you even have a culture that promotes innovation?
That too. So now here's another crossover, right? Like we're just talking now, that we have crossover between some of the topics. So there's culture once again. But again, we didn't
That's
have
right.
it mentioned here, but as we're having this conversation, we're seeing all of these different elements and how we can enrich the review that we're going to do, because we can talk about disruptive innovation.
Right.
But if your organization is not prepared to handle it, you can talk all you want, but you need to be reactive and responsive. So we
Right.
need to get in front of it as best we can. And if not, make sure that we are going to be able to adapt promptly if something were to surprise you.
Right. So one last word on disruptive innovation risk, but the way that auditors can help their organizations is making sure that the organization has the information they need to anticipate, right, what consumers are wanting in 5 years and not just tomorrow or today.
Right.
So that means that you need to have data, right? Big data, and how, just because your organization has the capacity to purchase all that data, but do they know how to use it?
Exactly.
Right? Because they could be lost in all that data and not really utilizing data in a productive way, in a constructive way. So looking to make sure that the company has the data, has the processes churn that data, to produce useful information, as well as having the key risk indicators to anticipate that next emerging risk, rather than just KPIs, which are outcome indicators.
Right.
But what are the predictive data analytics that the company is doing or not doing?
Exactly. Very good point. Exactly. Looking for those leading indicators. Very, very helpful there. Yes.
And then lastly, the most obvious disruption here is cybersecurity.
Right.
Is your organization prepared for a possible cybersecurity breach that could bring down your online website where customers are needing to use in order to purchase your deliverables?
Exactly. So you have crisis management. So part of that is how you harden your infrastructure, and the other one is in terms of crisis management. What will you do from a technology perspective, from a people perspective, reputation, risk perspective? How are you going to respond? And in some circles, people don't say if you're attacked or if you suffer a cybersecurity incident, but when.
Exactly.
Yes.
But not just crisis management, although that's excellent, but also putting DRBC on your audit plan, disaster recovery, business continuity. Whether the company has practiced that, done scenarios, and whether the plan is still relevant, whether people know about the plan, or is it just best kept secret on the shelf.
Right.
So all those things can be on the audit plan to help with disruption.
I'd like to pick up on something I just mentioned, which is in terms of whether it's up to date, right? So they prepared it a long time ago, but have they updated it, and have they communicated, and have they practiced it, so they know what to do if and when they need to put it in motion?
Exactly. And in today's world, with the Great Resignation and people, it's a revolving door. Whether the new people who could be coming into roles that have a critical role in the DRBC plan, whether they know what to do.
Exactly.
Right?
Exactly. Right. Very, very important. Thank you very much for that information. That's very helpful indeed. How about the fourth group?
Yeah. Let's take a look at the fourth group here. So the fourth group is disruptive innovation, which is coming up again. Environmental sustainability, social sustainability, organizational governance, and talent management.
Yes.
So what do all these things have in common? It's ESG. It's
Okay,
ESG.
very
This
good.
is this word that I'm sure everyone on the webinar listening has heard of in some
Right.
form or shape, right? E being environmental, S being social, and G being governance.
Exactly.
And so, the World Economic Forum has come out with these new capitalism stakeholder metrics that are trying to involve more stakeholders than just the shareholders in companies, the way that they measure, what they are measuring on, right? And who all they include
Right.
in their mission, vision, and values.
Exactly.
And so are companies just focused upon growing their bottom line? Or are they also going to grow their bottom line, but with consideration to treating their employees well, and treating the environment well, and treating their other key stakeholders well, like suppliers, customers, etc. And so those rules are about to come out. The SEC is involved, so it could become the next SOX here.
Exactly. It could have a very big impact. And from what we're hearing so far, there's so much attention being given to it from the accounting firms, from the consulting firms and think tanks, that definitely looks like it's going to be a major influencer in terms of what our priorities are going forward. So we need to be ready.
Exactly.
And we also need to take a look to see how prepared we are
Yep.
and how responsive we are going forward to address those requirements.
Right. So are internal auditors waiting on the sidelines until it becomes law, and then
Scrambling.
to help their organizations meet the new reporting requirements? Or are they acting now and encouraging and trying to influence the leaders to start thinking about how these ESG guidelines could impact their organizations, and what they can start doing now
Exactly.
before it becomes a black swan,
Yes.
right? So this is going to be very impactful. If you look at the heat map, it may be kind of further out, right? So likelihood may be ranked a little bit lower, but it will move up. The velocity of that risk will be moving up very quickly.
The other thing, too, is that our stakeholders will start to expect certain things.
Yes.
It's going to start asking questions. So the organizations might as well get a head start on that, knowing that this is going to come?
The big investment firms like BlackRock are already making statements publicly that they are moving towards incorporating ESG responsible companies into their due diligence of who they want to invest in.
Right.
So if you're in a company that's trying to grow and trying to have access to the loans and the investment funds to grow your business, then you need to be prepared for this, because eventually those investment funds are going to dry up if companies don't want to invest in you anymore,
Right.
because you're not ESG friendly.
Right.
So let's dive into these individual components.
Yes.
Let's talk about the most obvious one, which is environmental sustainability, right? So, I mean, we've had environmental laws and regulations in the U.S. for
Many years.
decades,
Right.
but it's mostly been kind of focused on oil and gas industries and extractive mining industries, but no more. So these new ESG guidelines will impact everyone, regardless of whether you're in a dirty industry or not. You know, the banks are already starting to report on what their carbon footprint is based upon how much travel their employees are asked to
Right.
fly to do business. Every time they step on a plane, that
Carbon.
exactly, and they
That's
have to
right.
capture that information.
And how they generate electricity, or how they receive the electricity they use.
Exactly.
Exactly.
So, so every industry will be impacted as far as how well you are capturing and measuring your carbon footprint. So that's an easy enough topic to understand. Then next we have social sustainability, which is the S in the ESG. And so here, you know, it's about how you're treating your employees. So if you're currently a company or industry that's paying minimum wage, you know, $7 an hour, and that's not a livable wage, you know, arguably, for your employees, are you going to be one of the first companies in your industry to move that number up?
Right.
Right, regardless of whether it's forced by the government or not. Or, yeah.
And there's so many eyes on that as well. So it's not just a cost benefit, or a financial analysis within the organization. You have a lot of people outside the organization also looking in,
Right.
and asking, does it seem fair for the organization
Yes.
to pay what they
Reputation
pay?
risk.
Exactly. So there's another crossover point we also have to be mindful about, because we have a lot of coverage
Right.
that could be negative very quickly if you're not careful.
So this interacts with the talent management risks that we spoke about in the other group, where auditors should be asking their HR departments whether they are prepared and doing the studies and putting an action plan in place to address, you know, treating the employees well, in order to, you know, raise up the minimum wage if you're a fast food restaurant, et cetera.
Right.
So what is the company doing, right, to keep up with this wave? So that's what I would be doing.
Is there an element of the community as well
Absolutely.
in this topic of social sustainability? So beyond the employees, also the
Customers.
the impact on the local community, the customers, the vendors. So those interactions factor into this as well.
Right,
Yes.
right, absolutely. So if you look at Instagram, you know, that's owned by Facebook, kind of the articles showing up in the news now in the headlines is the very unhealthy impact of kind of towards a certain demographic. So to teenage girls, you know, the mental health that social media has in general to that demographic. So that's again another reputation risk. And so what is
good
the,
illustration of that, and how hot it got for the company.
right? So you know, what is the company doing?
Right.
About this. And I guess one last thing, because it's so relevant right now, but the companies, you know, big tech's influence and ability to monitor fake news, you know what I mean, and things like that on their social media as well is important and kind of rising up in the headlines.
Great examples. Thank you very much for sharing those with us. So how about we turn our attention to how this will then impact our annual plan, and how we can go about making sure that it's going to work effectively in terms of us developing the plan and working with our audit committees, and because we need to manage
Right.
the annual plan, right? So what are some of the key things we should do?
Right. So let's say you had that list of top risks that we spoke about earlier, and you develop your first baseline plan based upon those top risks.
Right.
But to be agile, right? It could be that those risks change throughout the year. I mean, in
Right.
2020, everybody's plans got thrown out the window, right? Right around March 2020 or so,
Exactly.
right?
Yes.
Uh,
Yes, it did. Yeah,
so,
tremendously so.
so how
Yes.
adaptable were you, right? Did you still stick to the old plan that you issued in January? Still plodding along and
Not a
executing
good
on that
idea
plan?
at
Yeah,
all.
exactly.
Right.
So I would advise that in order to be agile with your plan, to schedule recurring meetings with your key stakeholders,
Hmm.
right? And that should at least happen quarterly um, before you report to the audit committee on the same plan, whether that plan needs to be changed, and having a very good justification to explain to the audit committee and the board why you're changing that,
Right.
right? It's
Exactly.
because of
Hmm.
this big event, because of this big strategic initiative that got, put on to the corporate strategy. That's why you're adapting your plan. So the only way you're going to know about these big initiatives that changes the risks and therefore changes your plan is to have a seat at the table.
Right. Okay. Very good starting point there is making sure that we communicate with them abundantly. And quite often it's quarterly. So we're talking about those recurring meetings with our stakeholders and making sure they're up to date and they understand where we're coming from if we need to make any changes or updates to it.
Right. But I mean, ideally, um, you should have a risk group that provides an updated enterprise risk assessment every quarter,
Right.
right? But if you don't have that handy, then you need to go out there and get that information through interacting and discussions and meetings with the key stakeholders and the business leaders.
Very good. All right. So let's take a look at the second action item, which is taking a look at it and treating it from a 12-month rolling perspective. So we're making those adjustments as we go quarterly. And I would imagine that in some cases, you probably also have to explain to the audit committee why it is that something is going to be brought in or pushed out, right? We're talking about it's risk-based, but it's also in some cases going to require maybe some outside resources that we also need to tap and receive because we probably have a very complex topic to address. So from that perspective, they need to know as well how that impacts our ability to pay for that service if we're going to use a co-source provider.
That's true.
Mhm.
Yes, and so I see a lot of audit functions going to a more co-sourcing structure
Mhm.
because that allows you the flexibility, right?
Right.
Because if you have back in the olden days when you had a stagnant plan,
Mhm.
and so you knew at the beginning of the year, what kind of resources, and if you saw that during the plan you weren't going to need any experts,
Mhm.
right? Because you weren't planning that audit. But then halfway through the year, your plan changes to adapt to the top risk of the company, and all of a sudden now you do, and you didn't budget for it, right? So
Mhm.
I think we do need to always have a discretionary budget to tap into the on-demand talent that's out
Mhm.
there.
Okay.
It's very, very difficult in my mind to try to be adaptable with a solely 100% in-house staff.
Mhm.
Unless you've got 100-person audit team where you have all kinds of different expertise, and but a lot of times with the
That's not the
more,
case.
yeah,
Right? In many cases,
exactly.
you just have to be very strategic about how you go about doing that. And of course, a part of that will also be in terms of how you're going to factor in training into that as well. So you're looking in terms of what you anticipate auditing, and then how much of that is going to be covered by someone from the outside, but also how much of that you're going to train and develop your own people. So that's part of how you also need to think about it strategically, I will imagine.
That's true. Yes.
Hmm.
The other thing I want to say about the rolling 12-month audit plan, we've been talking a lot about what the internal audit function can do internally, but I would say that we also need to accommodate our key stakeholders, their changing environment, right?
That's
I mean,
right.
they might have committed to an HR audit in Q1, but then something happens and they say, Lynn, I know I said that I was going to be available, but we're doing an HRIS system implementation. Can we move it? You know what I mean? So,
Hmm.
so that's another reason why a 12-month rolling audit plan makes sense because you're just moving it out to another quarter, and that way it doesn't look like it's dropping off the map, right? It's you're just adapting it on a quarterly basis and moving things around. So just bottom line, you need a very flexible, agile, adaptable audit plan.
Very good. And agile doesn't just mean auditing faster.
No.
There's a huge mental shift as well. How you approach the engagement is also different, and how you approach the clients as well. They need to also understand the expectations and how they need to play a more active role during the engagement as well. That's part of what agile is about.
Absolutely.
Yes.
Gone are the days that we only visited our audit clients when comes time to kick off the audit. I mean,
Right.
hopefully, our auditors, today's auditors, are developing very good relationships with our audit clients, not because we're about to do an audit, but because we want to have a standing good relationship with our audit
Right.
clients throughout the year.
It's one of those things we used to refer to it as they hear from audit when audit needs them or needs something from them.
Right.
And that's not a very healthy relationship.
No.
So we need to make sure that we are promoting the profession, promoting the unit and what we can offer, because there's that aspect of it as well. And also to get them to know us, know
Right.
who the auditors are when we're auditing and when we're not auditing. As individuals, as colleagues, as business partners, it is going to go a long way. So when you do have an audit coming up, they have more familiarity with who the auditors are, and hopefully the whole relationship will go
And
much,
we have
much
more
smoothly.
familiarity with them as well.
Exactly.
It's a back and forth. But one last thing before we leave this second point is that you talked about the talent and how important the talent is in order
Right.
to accommodate this new agile auditing, agile plan way of doing things. But in order to be a more adaptive internal audit team, I think we need to have a lot of diversity of skills and experience within the team. If you
Correct.
have a bunch of just CPAs, ex Big Four, well, you're really strong at financial statement auditing.
Right.
But if the risks say that we need more operational auditing, it'd be great to have as a part of your team people who came out of operations. You know
Exactly.
what I mean? So having that diversity and having different pipelines for recruiting auditors to get a collectively very strong team that kind of covers all the bases in terms of all the different risks and therefore all the different audits that need to be done. And then on top of that, supplementing with a co-sourced third-party service provider as subject matter experts.
And there's been a lot of talk about also in terms of the diversity, not only in terms of the technical skills that we need, but also in terms of the soft skills that the auditors need to have as well. So the communication skills, the team building, time management, conflict resolution, those skills are also very important.
Right.
Exactly.
Which means that we need to hopefully update our interviewing process, right? Because
Exactly.
does your interviewing process kind of bring that information out about soft skills? Because it's much harder to train on soft skills than technical skills. I can train anyone to audit, right? So I'd rather bring somebody in that has the business knowledge and then but hasn't audited a day in their life, but I'll teach you how to audit. Whereas, if I bring somebody in who has a lot of knowledge about auditing, but they don't have relationship building skills, they're not good at communication, it's very difficult to turn somebody from not having good communication skills to all of a sudden having communication skills, right?
Right.
But I can turn somebody who has very little auditing experience into a great auditor. So good point
Yes.
there.
Excellent. Very good. Any other thoughts related to our list of action items?
Right. So the third one is pretty important. So the way that I develop the audit plan is at first, at the beginning of the year, when you're developing the plan, it should be kind of pretty high level, right? Because you're trying to focus on the top risks, like talent management.
Right.
Let's put talent management risk as let's do an audit to tackle that in Q1. We don't know exactly yet, what the scope is until we start to plan for that engagement, and then we start talking to HR, key stakeholders, and finding out what are all the critical policies and critical processes that drive talent management, and then we'll scope out our audit based upon what the answer to that question.
And for large organizations like a multinational, you can also, from a scoping perspective, decide if it's going to be just the United States, North America, if it's going to be Europe, Middle East.
Yes.
So you have to think about the geography
Yes.
as well. So the topic, what topics, and what locations, for example.
And that's where data analytics can help. Data analytics can help us in all the phases of auditing, even from the planning of the annual audit plan, right?
Right.
So I would run some preliminary data analytics to find out where the highest turnover is, right? And then we can focus our HR audit or talent management audit and include those regions or those business units or those offices in the plan. And then run data analytics again when we start to get to engagement planning to find out which processes have the biggest challenges, right? Where the KPIs are out of whack.
Exactly. Very, very helpful information there as well. Okay, so what other things are key to our understanding of this process?
Well, we kind of mentioned it before already, but always allocate some discretionary time for the unexpected. So what you don't want to do is take your total man hours available for the year, fill it all in with all the different audits that you want to do, and then when something unexpected comes up, you have no capacity left. So I would leave about 15% of your audit resource kind of open and available, 15 to 20%, for things like management,
Special projects.
Yeah, special projects, or just unanticipated, investigations, pandemics, whatever. But just unexpected things.
Exactly.
Cybersecurity, breaches.
Right.
Hopefully not, but
hopefully not, but still have to be ready or prepared. Exactly. And if not, we can fill it with something else. But at least we have that capacity allocation there. So earlier we were talking about having some resources, monetary, for subject matter experts, having external consultants and co-source providers. Now we're talking about time as well. Any final thoughts as we look at these items and how we can go about doing this?
Well, I think the biggest lessons learned from, here we're talking about having a dynamic, agile audit planning process and audit plan. But really, I think the entire internal audit function should be agile. So it's not just the planning process.
Right.
We need to be agile in the way that we project manage. We need to be agile with our tools and technology. So that's data analytics, using predictive indicators, et cetera. We need to be agile in everything: people, processes, and tools. Right? So I think agile auditing is really the way that we need to be moving towards. Otherwise, if you're not thinking about making your internal audit function agile to some extent, right? Maybe not, totally 100% agile, but like agile light, you're going to be falling behind, and you're going to be doing a disservice to your organization, because as organizations are trying to be technologically advanced and compete with their peers, they may be outpacing the audit function, right? If we're not keeping up.
So helps you in terms of responsiveness and efficiency.
And relevance.
Exactly. Very good. Lynn, thank you very much for all of this very valuable information as we think about 2022 and the key risks we need to put on our audit plan, and also how we can go about making sure that our audit plan is agile. Very important as well. Thank you so much. So let's turn our attention now to some questions that our audience may have. So what questions do you have that we can present to you, Lynn?
Thanks, Lynn and Hernan. To our viewers, if you have any questions, be sure to enter them now in the chat panel on the right side of your screen. Before we get to the Q&A, I'd like to tell you a bit about Audit Pro TV. Audit Pro TV is subscription-based, on-demand audit training that's effective and engaging. A one-year subscription costs less than a 3-day classroom course, and it allows you to gain access to the training you need at any time from anywhere. Visit acilearning.com to learn more about Audit Pro TV and to get a free team trial. All right, Dr. Hernan, let's start with our first question.
Wonderful. Well, there are several questions here, so let's take a look at the first one. This one is from Paul. My company does an annual enterprise risk assessment, ERA, enterprise risk assessment. How can I know if there are changes to the top risks throughout the year to adapt my plan?
Well, there are several ways that you can do that if your organization currently only does it once a year, and you want to know how the risks have changed, maybe on a quarterly basis. So we spoke about one of it during our prepared slides, which is talking to your business leaders and key stakeholders throughout the year, at least once a quarter. But there's a couple of other ways that we didn't mention that I want to mention here, since this is a question that's directed at that topic. But I would also ask to be to have a seat at the table, at the ERM table, right? If there's a risk committee, even if it's not a formal risk committee, but whatever group within your organization that's tasked with identifying and prioritizing risks and managing risks, you want to get invited to a seat at the table. And if you have to knock on their doors to get an invite, then that's what you need to do. Now, if that's for whatever reason it's not possible, then you should be asking for any sort of reports that come out of that committee. If you don't get to be invited, to attend, then, can I have your quarterly reports that come out? You know what I
Right.
mean?
Yes.
So that's another way. And hopefully they don't push back, because our internal audit charter should allow us to have access
Exactly.
to any kind of information, and that shouldn't be top secret. And then finally, to talk to your dotted line report, whoever that is, C-suite member is, and ask them to provide them updates as he or she's coming out of those meetings, right? So there's a
Excellent.
number of ways that we can extract that information.
Very, very good. Thank you. Helpful information indeed. Okay, so let's take a look at another question from Anna. What is your advice if I am always off track with my audit plan? I depend on the auditees and the audit work being delayed, and I can never fulfill the work according to the plan, even if I account for unpredictable things.
So my answer to that is agile auditing. Like I said, that's the way to go. And agile auditing, what it does, many things that we haven't even mentioned, because haven't. This is not an agile auditing session, but agile auditing will force you to only pick the top procedures that will address the top controls that need to be tested, right? No longer are we turning over every stone, or when we do an HR audit, we're doing every single process. You need to be very selective
Exactly.
in choosing what is in scope. So it's only going to be recruiting, processes that we audit. It's only going to be the onboarding process. It's only going to be, training and development, because those are the three processes that have the biggest impact to that talent management risk. So all the other 97 processes within HR, we're not even going to look at. And then even within each of those three processes that we've selected for the HR audit, we're only going to do the procedures and the controls and the policies that have the most impact to that risk. So we're not even going to do everything within the recruiting process. We're not going to test every single step of the recruiting process. So we're not going to test every single control under the onboarding and training. So we're going to be selective there. So it's risk-based auditing on steroids, right? We're constantly filtering out only. So you're going to go from a 100 step audit program to probably a 20 test audit program.
Very focused.
Very focused, laser focused. And the great thing about it is, if you're picking the most important things, and you're going to extract what the most important things are by constantly interacting with your key stakeholders. They're going to guide you and tell you, this is the most important policy when it comes to talent risk management. This is the most important control when it comes to talent management risk. And so if that's very important to them and you find that it fails, then obviously that's a high-risk finding.
Right.
So your audit report is going to be a bunch of very important findings and not low-risk findings that nobody cares
It will
about.
be relevant by the nature of your planning.
Exactly.
Yes.
So interact very collaboratively with your key stakeholders in order to understand, keep peeling back the onion layers to be laser-focused with your audit. And that way, you won't have 100 things to do that makes you fall behind.
Okay, great, thank you. Okay, so let's take a look at the next one. It's from Sheheradase, and he asked, and it's related to the pandemic. So he says, how do you feel the weaknesses detected during the pandemic were handled? How do you anticipate those types of risks?
So I would say that there was a wide range of how well companies handled the risk of the pandemic. Some did very well, and some crashed and burned.
Yes.
And so same thing, whether a company was good at adapting and addressing those risks really depended upon the industry, on the company itself. But I would say that the companies that did fared very well were obviously prepared, right? They didn't know that there was a pandemic coming, but they had a crisis management plan that was tested. They had plans in case there was a hurricane or a tornado that tore down their corporate office, and they knew, okay, everyone works from home, everyone has a laptop. So even though it wasn't a hurricane or a tornado, it was a pandemic, but nobody could come in the office, they switched over to, okay, it wasn't a tornado, but we still have to work from home. So we already have that plan in place. So the companies that fared well were the ones that were prepared with things like DRBC, disaster recovery business continuity, crisis management planning, and that they practiced it and that they had many different kinds of scenarios instead of just one scenario.
And infrastructure was there already in place.
Exactly.
Right. Very good. Thank you. Very helpful. Another question. This one is from Anna. How extensive should the internal audit documentation be? External audit has many rules and mandatory documents, but internal audit is more flexible. What is the minimum requirement for documenting the internal audit work?
Right. So again, I'm going to go back to agile auditing. So the principles of agile is that you focus on all the steps that add value. And the steps that don't add a whole lot of value, you just do enough. You know what I mean? So here with work papers, you do enough to comply with the IIA IPPF, right? Which just basically says they should be standalone work papers.
And you should document the work,
Right.
but it doesn't say they have to be exhaustive.
Exactly.
Exactly.
You don't have to have duplication everywhere, right? The same documentation showing up in the flow charts and then showing up in the Excel spreadsheet Rackham and then it's showing up again somewhere else. I mean, so duplicative. And then the other way that you can be very agile with work paper documentation so that you can spend as little time as possible but sufficient in work paper documentation because, we do need to have good work papers, but save most of your time on the value adding things like recommendations is to go automated, right? Automated work papers will save you time, and with automation, it will force you. There are required fields that you have to fill in, so that it keeps the standard consistent.
Right.
So that's what I suggest.
Excellent. Very good. Very helpful information there. Okay. Question from Alina. Is it only the internal auditors who are qualified to draft the audit plan? Business managers have their own issues they would like to address and include into the audit plan. What is your experience regarding this?
Collaboration, which is also an agile concept.
Right.
So we're not going to do, other than work papers, we shouldn't do anything in isolation, right? When you're doing the annual audit plan, you should be engaging your key stakeholders.
Right.
When you're doing the engagement planning, you should be collaborating with your key stakeholders. When you're doing your scoping, your testing even, what should you test that will provide the most value in knowing whether this control fails or not? That should be collaborative. The report writing should be collaborative. So, of course not. Internal auditors are not the only ones qualified. I don't know exactly what that word is meant to say. We are the ultimate deciders in developing the plan, right? I mean, obviously, we're not going to hand the key stakeholders a blank piece of paper and say, tell me what I'm going to audit. But we should be soliciting and engaging our key stakeholders, which are our audit clients, right? They're the ones receiving our services and our partners. We should be doing it together with them. Otherwise, if we do it in isolation, we may be coming up with a plan that is of no interest and of no relevance to our business leaders.
Sooner or later, that'll come to light. Yes, indeed. Okay, so another question for you. When I'm auditing, I prepare the audit report draft and then discuss the findings and any errors after that. Do you think this is correct, or should all the findings be discussed before issuing any report?
So again, the agile way of doing the audit reporting, although it is kind of off topic, but I'll answer it. So you should be communicating your findings as they come, right? Even before it's finalized and everything's, the T's are crossed and the I's are dotted, you should be talking about the facts of the findings as soon as they come up. And then the customer can say, oh, I have something here that makes it not a finding anymore. Okay, so I don't have to spend like the next 4 hours writing this up now. Thank you so much. That got missed. You know what I mean? Or they can say, oh, you're right. That is a finding. Thank you for telling me, even though you still have 3 weeks, 4 weeks left to finish the audit, if I know now, I can probably jump on it and remediate it before the audit's over. That way, we can both sit side by side in front of the audit committee and say, we found this gap, but business executive sitting next to me it is has already remediated it. So everyone looks good.
Right, exactly. Very, very good there. Okay, so here's the last question. This is from Linda. My company only wants me to audit compliance or accounting related risks. How can I convince them that we need a risk-based plan?
Well, I don't know who it is in the organization that is asking for only accounting and compliance. Maybe it's the CFO because they obviously have a lot more skin in the game when it comes to accounting related risks. But I think that because we are reporting to the audit committee and not just dotted line to the C-suite, I think we should be convincing the audit committee that our audit services should be covering a lot more risks that could bring the company down, right? That could really negatively impact the company. And so once we convince the audit committee, then those mandates will come down, and then all we have to do is convince the C-suite dotted line reporting line that I can't just benefit you. What I mean, I've got to look at all these other risks that could impact your peer sitting next to you, right? The COO and the CLO and the CISO. So I think it should be a fairly no-brainer conversation.
Once we make that alignment with our strategic needs and objectives and the
Exactly.
mission of the organization, right? So
Exactly.
that'll help tremendously. Lynn, thank you so very much. It's been very enjoyable and very enlightening also to hear your perspective in terms of the key risks that we need to be on the lookout for and how we can go about implementing an agile audit plan. This will definitely go far. And as we think about the end of the year and the holiday season, this is a great gift you're giving all of us. So thank you very much.
It's been fun. I enjoy talking about this. And to all of our viewers, thank you for listening to me. It's spending an hour with me, and happy holidays.
Very good. Thank you so much. Thank you to our viewers, and I hope that you will join us again for a future webinar. We're definitely going to put together more programs that will provide useful information so we can become better professionals and serve our customers better. Thank you very much.
Hope to see you soon.
Thank you for joining today's webinar. You will receive a link to the webinar recording delivered to your inbox. See you next time.